Hey traders, Jeff coming to you here. I want to take a few minutes and kind of outline how we entered a couple different plays today. I specifically want to talk to you about something we use called a measured move. We use this for a way to enter certain stocks or options and the way that we exit. So I'm going to show you both methods and how we put our alert out today to enter this particular trade used under deck from the measured move concept. So hang with me for just a second. Let me pull it up. All right. So in addition to that, we're going to talk about the current market conditions. Been kind of cray-cray here the last couple of weeks here, and why we're only about 40% of the trades this month by the same time we took in January. And why is that? Measured moves, again, for entries and also for exits using Fibonacci retracements and some resistance levels for longs. And obviously our result. We're going to show you how we're doing inside of our room and what that might look like for our results. So let me kind of take a second and I'll bring this up. All right. So when I think of measured move, basically, I usually look at these on a gap down type basis here. So when I'm looking to enter a stock that's just extremely beat up, oversold, I typically look in that direction. I want to identify where the support area is. But in addition to that, I want to look at the distance from the move higher, from we move down to where the bottom might be. Remember, I had this arrow drawn, this box drawn when the market was still in here. And if we did go lower, I just simply duplicated this box out. I'll kind of show you here. Just take that first box and duplicate it out, move it down, corner it, and it tells you about where the stock should actually stop from a measured move perspective. Some traders do that on Fibonacci. They look for 110% retracements, maybe 168% retracements, but we don't have that available to you. In this particular one, getting in a trade that's at support or near support area, I use these boxes and they're pretty darn accurate. You'll be amazed at how spot on that they can be. This case, we happen to have support about 50 cents, 75 cents, probably $1 lower. So I definitely drew the line on support. But again, if I actually hit a measured move and I start to see a turn, I will take it before support. Here's what it looked like on the 65-minute chart. First off, when they bounce here up these big moves down, I never take these first ones. I always want to see this pseudo buy setup. I say pseudo, it's not a buy setup, but it does have a bar break. I want to see it fail, and I want to see that bottom taken out. At that point, when it comes down, the measured move is in place. I want to look for the 8 MA in here, and I'm going to watch it break, right? Here we kind of broke, pulled back, bottom, we double bottomed here, broke here, pulled back, higher low, and we took this in a room today right here. 157.24 is where I told the traders, this is where we want to get in, put our stop below here. One key point, never put your stop directly even 20, 30 cents that low on these ones that fall. Give it $1, maybe $1.50 below the area. Why? Because traders will come back down. They'll come back down. They'll steal your stops here, and then they'll take off to the races. How many times that happened to you? I know with me it has over the years. So I stay a little bit further out, make sure I'm a lot safer from happening. You'll be amazed at how many times it does happen. Once we got in here, we had basically about a half R to our reward move up here, and I'm looking for greater prices. Now, I drew the Fibonacci earlier. You can see from here to here, where's our target? I typically target back to the 23.1 here, or if the floor or the ceiling is lower, I'll go to the ceiling, which is where we dropped under. But right now, I got a target of about 164 on part one. Part two, maybe 38.2, but I'll be honest with you, on the daily chart, you draw this over, I'm going to be probably coming out somewhere between the 8-period moving average here at around 166 to 170, which is where the 169 with the 200 is. So target one here, target two somewhere between these two areas, maybe the 200 if I can get there. And again, really cool concept. If you don't use this, practice it, watch it. Works really well on stocks that are pulling back, like usually starting from a gap. And once they fail, draw the box even before candles print in this area. It's like magic. They'll come right to that box, and that's where they're going to turn. You still need some guidance. You still need to drill down to the 65-minute chart and make that case that that's going to happen. And maybe there's support above it, maybe there's support below it, but I rely a lot on this, and I also use support as a backup or a secondary in that area. So great play today on deck and the measured move. All right, some of our results here, you can see We do pretty well. We win a majority of the time here. We have losers. They're going to happen. There's no way around them, but we're very particular how we enter stocks. I have a risk here of a 375, but many traders trade more than that. Some trade less. That's not the important thing. You always can drill up once you're doing well. You can add zeros to your risk if you feel comfortable and you have a history that tracking that's using that. You can see a lot of credits in here. We do a lot of credit spread. We'll be selling puts in certain things. And some debits for swings, and also some of the straight option calls through diagonals and things like that. You can see nice move here. One thing that was of interest, though, from February 1st here to here, very few trades this month, right? And compare that from January 15th to here. Look at the last 2 weeks of here. It's only about 30% of the trades that we took in the back half of January were taken in the front half of February. Why? Well, a couple different reasons, but the main reason for me was the market is a little bit schizo, right? Look at the move here on the daily chart. Every time this gets bought back, this is going back here to early February, that should be bearish. We waited, big move higher. Every time it's gapped down, it pulled back. I drew this line yesterday, the higher low, the wedge. We hit the top. We're 4 times at all-time high in the S&P here. We closed up near the high in the S&P here. Just a few pennies off. And normally I would think this is going to be a bearish tone up here as we hit that head. We'll probably push through it, but I think it's going to be a struggle and it's going to get choppy to go through that area. So be careful, especially tomorrow on the heels of a dominant run here in the market. So, but again, until things are bearish, they're bullish. But it's going to be a little bit of a choppy move. What does that mean? Be looking for more scalps, maybe credit spread, something that can burn a little bit more, burn theta in your favor. Don't be looking for long-term high plays unless you're taking something like the deck or something like KKR. We actually took this at the bottom as well. A similar strategy, but just make sure that you're being kind of nimble in your takes. At least take some off the table. Our day trades have been literally dried up this week. We took 1 scalp yesterday, and I don't think we've had another day trade this week. Something has changed in the market here, and it shows up. The way that we do it, we don't specifically go there to trade or not to trade. We just look for the ingredients each day and each morning as it's happening. And I find myself scanning more and more and more, coming up with fewer ideas. And one person might think, well, it's so strong. Why isn't there opportunity? It doesn't mean that at all. It's how the candles are forming. It's the volatility of the market, the back and forth price action we saw today. If you didn't happen to see that, very interesting day in the SPY here. You can see how on the 5-minute chart, we went back and forth in $2 ranges here. I mean, here, breaking out above the 5 bullish pullback, you would think they've been bullish. $2 move down, $2 move up, $2 move down, $2 move up, $1.50 move down, and then it went higher by $4. Insane move. This is the type of move right here that will take you out. And one last thing I'll share with you. This, and I was talking to our team today, our traders on our mentorship call, and I told them, I said, this is where a lot of newer traders get caught in the trick bag because they think they should be doing something. Market's running, a lot of volume, a lot of volatility. They're not doing it. So they start pulling the trigger on things because they're just more so talked into it because they don't have a lot of, not to show this week or this month or that day. And this is absolutely, we'll take it to the cleaners in here. In hindsight, sure, get in long calls and go with it, but that's to the rear, right? So just realize that this is the time, sit on hands, be careful, be nimble. There are some plays that we're in that we get in at the right time, but we've definitely lowered that until we kind of settled in here and get a little bit more, still want volatility, but we want a little bit less trickiness in the way the markets cooperate here. Very volatile, back and forth, slippery. And if you have tight stops, you're going to get taken out almost every one of these swings. So hope that helps. Looking forward to seeing you in the room. Until next time, this is Jeff, Full Throttle Traders. We don't trade what we think, we trade what we see.